Hello viewers, welcome to my channel. I'm Hashim. Now I am doing two problems in this video. So far I have completed 9 problems on computing the income from house property. Now 10th and 11th problem I am going to explain. So before starting the 10th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. Always keep it ready. Without problems you cannot understand the explanation. And almost every problem the provisions are same, only 1 or 2 new points are there. So you have to focus on those 2 new points. Always keep a paper, pad or any notebook, pencil, calculator ready, so that whatever I am explaining, jot down the points, because you will forget it if you do not record all the points. So before starting the problem, take the screenshot of the points which I have written on the board, then I'll explain every point in detail. See the 10th problem. Mr. Vishal Maheshwari owns a house whose municipal value is 1,40,000, MRV 1,40,000. A fair rental value, FRV, is 1,38,000. He let out the house to Srimati Parameshwari for an annual rent of 1,80,000. The annual rent is 1,80,000. So per month it comes to 15,000. 1,80,000 divided by 12. The tenant could not pay the rent for the month of February and so was made to vacate the house. That means there is an unrealized rent for February, 1 month rent unrealized. The house remained vacant for March. So we are having vacancy allowance and also unrealized rent. February month, the tenant has not paid, and March, the house was kept vacant. Then the house remained vacant. As per the rental deed, the municipal taxes are to be borne by the tenant. But Srimati Parameshwari failed to pay, as such the dues were paid by the owner. The Income Tax Act says municipal taxes, if it is paid by the owner, it will be allowed. If it is agreed to be paid by the tenant, it is not allowed. In this problem, according to agreement, the tenant has to pay, but the tenant has not paid. So ultimately it is paid by the owner. But Income Tax Act says what is the agreement? It is to be paid by the tenant. So not allowed. Even if it is paid by the owner, not allowed, because in the agreement it is written that it has to be paid by the tenant. Now the municipal taxes are 15%. Interest on loan taken amounted to 50,000. Loan taken for repairs, allowed as deduction. Interest paid on loan taken for purchase the house, construct the house, repair the house, renovate the house or reconstruct the house, it will be allowed. So 50,000 will be allowed. Compute the income from house property of Mr. Vishal Maheshwari. This is the problem. Mr. Vishal Maheshwari, computation of income from house property, GAV, gross annual value, less municipal taxes, net annual value, deductions, then income. Now, in working note, we have to calculate the gross annual value. First, we calculate the ERV, expected rental value, which is higher of MRV and FRV. It is given MRV 1,40,000 and FRV 138, given in the problem, first line. The higher 1,40,000. So now ARV, rent of 12 months. It is given rent of 12 months as 1,80,000. The monthly rent, it comes to 15,000, right? Now adjusted ARV is equal to annual rent minus unrealized rent minus vacancy allowance. Because February month the tenant has not paid and vacated the house, and March month there is completely vacancy, no tenant was there. So annual rent minus unrealized rent minus vacancy allowance. So 1,80,000 minus 15,000 minus 15,000. 115,000 for unrealized and 115,000 for vacancy. The total 1,50,000 is adjusted ARV. What is the ERV here? 1,40,000. So adjusted ARV is greater than ERV on account of vacancy allowance and unrealized rent. So adjusted ARV is the GAV, gross annual value. So we got GAV 1,50,000. Municipal taxes are not allowed because as per the agreement it is to be paid by the tenant. Even if it is paid by the owner, then also it is not allowed because whatever is there in the agreement, so not allowed. So 1,50,000 is NAV, net annual value. Now standard deduction 30% of NAV, 30% of 1,50,000, 45,000. And interest paid on loan taken for repairing the house allowed as reduction, 50,000. Total 95. So 55,000 is the income from house property. That's it. This is the end of problem number 10. Now problem number 11. Sri Indra Mohan constructed a house in Delhi in 2010 and transferred the house for a consideration of natural love and affection to his wife. Presently the house is let out on a monthly rent of 30,000 including 5,000 services provided for residential purpose. One new point. The owner of the house is Sri Indra Mohan, but he has transferred the house in the name of the wife. So legally the owner is the wife, but Income Tax Act says if a person transfers the house to another person without consideration on account of love and affection, it is not a valid consideration. If he transfers the house on the basis of love and affection, it is not a valid transaction. So ultimately Indra Mohan has to pay the tax. Even the legal owner is the wife because he has not transferred the house for a valid consideration. That is the point. The rental value is 30,000, but in this 30,000, 5,000 are for services provided. So only rent we have to take, that services we have to tax separately as income from other sources. So instead of 30,000, the house rent is 25,000. 5,000 you deduct. Then municipal rental value MRV is 2 lakh. The municipal taxes are 10%. This 10% on MRV, 10% of 2 lakh is 20,000. It is agreed that tenant should bear the cost of repair. It is irrelevant because repairs are not allowed as deduction. So whether it is paid by the owner or whether it is paid by the tenant does not make any difference. Ignore. Then and the owner paid the following facilities: gardener's salary 12,000 and to maintain the lawns and water charges 2,400. The owner of the house is providing some services to the tenant and charging some service charges. So these service charges received from the tenant is taxable under that income from other sources, and the cost of facilities provided will be deducted. The facilities provided are 12,000 for maintaining the lawns and 2,400 of water charges. So what we'll do? 5,000 into 12 months. So we'll see how many months the house is given on rent. Other expenses incurred by the owner were insurance premium, ignore. Collection charges, ignore. Interest on loan for constructing the house, allowed as deduction under section 24B. During the year, the house was vacant for 2 months. That means for 12 months he is not getting the rent. 2 months vacancy allowance. Calculate the income from house property. So we have understood all the contents of the problem. Now computation of income from HP: gross annual value less municipal taxes, NAV, deductions to income. Now in working note we calculate the GAV. First, GAV is ERV is higher of the following two: MRV, FRV. FRV is not given. Municipal rental value is given 2 lakh. FRV not given. So ERV is 2 lakh. Now actual rent. Actual rent for 12 months is 25,000. Remember 30,000 is given. But in that 30,000, 5,000 are service charges. Remove service charges. So 25,000 per month into 12, 3 lakh is the annual rent. So adjusted ARV is annual rent minus vacancy allowance, 2 months vacant. So 3 lakh minus monthly rent is 25,000. 25,000 into 2 is 50,000. So 2,50,000 is the adjusted ARV. Now adjusted ARV is greater than ERV. ERV how much we have? 2 lakh. Whereas adjusted ARV 2,50,000. So 2,50,000 is greater than ERV. So adjusted ARV is the GAV. 2,50,000 gross annual value. less municipal taxes 10% of MRV given in the problem. So 10% of 2 lakh comes to 20,000. Deduct 20,000, 2 lakh 30,000 is the NAV, net annual value. From this standard deduction 30%. 30% of 2 lakh 30,000, 69,000. Interest on loan given in the last line 30,000. 30,000 interest on loan. Total 99,000. 230 minus 99, 1,31,000 is the income from house property. Now, apart from income from house property, he is having income from other sources. The owner of the house is taking service charges 5,000 per month. So, during the whole year of 12 months, 2 months vacant, that means service charges the owner will not get. So, service charges are received only for 10 months. So, here income from other sources. Service charges received 50,000 into 10 months. 5,000 into 10 months, it comes to 50,000. Less services provided, cost of services provided. That is gardener's salary 12,000, water charges 2,400, 14,400. So 50,000 minus 14,400, 35,600 is the income from other sources. These are the complete provisions given in the problem. So totally we have completed 11 problems on this computing income from house property. So if you are regularly watching all the problems from beginning till 11 problems, definitely you are in a position to attempt the problem on computation of income from house property. Inshallah, we will continue the next problem in the next video.